I saw that Cyient released their financial results for the quarter, and 9 months ended December 31st, 2024. And, a bunch of other announcements too. It seems like they've been quite busy. But before we dive into the details, did you see the market reaction? That stock tanked 20% after the news of the CEO's resignation broke?
Yeah, that was a pretty sharp drop. It seems like the market didn't take the leadership change very well, which is understandable given the uncertainty it brings. But there's a lot more to unpack in their financials and announcements, so let's get into it.
Right. It's definitely a big headline, but there's a lot more going on with Cyient. For instance, their revenue from contracts with customers was around 19,264 million for the quarter on a consolidated basis. How does that compare to the previous periods?
Well, if you look at the consolidated results, it's up from 18,491 million in the previous quarter and 18,214 million from the same quarter last year. So a modest increase, showing some growth.
And what about their expenses? I mean, it seems like that's where a lot of the story lies,
Right. So their total expenses for this quarter were about 17,355 million. That's up from 16,459 million last quarter and 15,902 million from the same quarter last year. So they are spending more, but they also seem to be generating more income.
Okay, that makes sense. So what was the overall profit picture like then?
Well, the net profit for the period was around 1,277 million, which is down from 1,866 million in the previous quarter, but still up from 1,532 million in the same quarter last year. So mixed results, but not a net negative.
Interesting. It also mentioned something about acquisitions. Can you elaborate a bit?
Yeah, so it looks like they acquired Altec Electronics LLC in the US and Abu Dhabi and Gulf Computers establishment in the UAE, which are both pretty strategic moves for expanding their footprint. It's kind of like adding new ingredients to a recipe. It changes the flavor profile.
Right. And that also involves some contingent payments. How does that work out for a company?
Well, contingent payments usually mean they'll pay more later if the acquired company hits certain performance targets, like a bonus for achieving certain sales goals. It's a way to manage risks and incentivize growth.
Makes sense. The report also mentions a stake acquisition in Azimuth AI. What's that all about?
Right. They acquired a 27.62% stake in Azimuth AI, which is an embedded silicon product company, a move that positions them well in the edge computing space, like buying a piece of the puzzle in a key area.
Now, let's shift gears a bit. How do the standalone financials stack up against the consolidated ones?
Well, the standalone revenue is lower at 6,233 million for the quarter compared to the consolidated 19,264 million, which makes sense. But the standalone net profit is also lower at 1,374 million for the quarter.
So it seems the subsidiaries contribute a good chunk to the overall revenue and profit, right?
Exactly. The consolidated figures show the complete picture of Cyient's global operations, including all subsidiaries and associates, which really amplifies their business.
Okay, that gives me a clearer picture. What about the segment reporting? What's driving their business the most?
The Digital Engineering and Technology, or DET segment, is still the largest, with a revenue of 14,799 million. The Design-Led Manufacturing segment, or DLM, follows with 4,443 million, showing they're pretty diverse in operations.
And what about the future? Any guidance from them in the report?
Yes, they expect the DETT revenue degrowth to be around 2.7% year on year in constant currency for FY2025, with an exit EBIT margin around 13.5% for Q4 FY2025. They seem to have a clear vision, like having a detailed map for the road ahead.
Okay, that's helpful. I noticed the report mentions a change in leadership. What's happening there?
Well, Mr. Karthikeyan Natarajan has resigned as Executive Director and CEO, and Mr. Krishna Bodanapu has taken charge of operations for the interim. It seems like they're currently in a transition phase.
So that's a big shift. I mean, it must bring some uncertainty to the overall picture, right?
Yeah, transitions always come with a bit of uncertainty, but they've also appointed Ms. Debjani Ghosh as an independent director, which should bring some stability and expertise to the board,
Right, that's a good to hear. The report also talks about an expansion in Sydney. Tell me a bit about that.
Yes, they've launched a new office in Sydney, which can accommodate over 100 associates, expanding their reach in connectivity. It's like spreading their roots in new ground, looking for fresh opportunities.
And it seems like they're also doing some cool stuff in the automotive sector.
Exactly. They've inaugurated a center of excellence for developing next gen magnetic sensors and power semiconductor products for the automotive industry in collaboration with Allegro Microsystems. It's all about driving innovation.
I see. So they're making investments in research and development, and that's always a good sign, I think, right?
Absolutely. Investing in R&D is essential for sustained growth. It's the same as planting seeds that grow into a harvest in the future, setting themselves up for long-term success.
I guess all these acquisitions and expansions must be impacting their financial health, right?
Yes, there are impacts. For example, Q3 FY2025 group EBIT, PAT, and EPS exclude the impact of one-off M&A expenses. So it's a good reminder to always pay attention to the footnotes and details in financial reports,
Well, I think so. These kinds of details can be crucial to understanding what's really going on, actually.
Absolutely. It's like looking at the fine print of a contract. It's all about details and seeing the full picture.
Now, let's talk about some more details. What about their earnings per share or EPS for the quarter?
Okay, the basic EPS for the group is about 11.65 rupees, which is down from 16.28 rupees in the previous quarter. So a decrease there, but also influenced by the one-off M&A expenses. It is important to note,
That kind of reinforces the impact of those expenses, doesn't it? What about the DET segment's EPS?
the DET segment's basic EPS is 11.25 rupees, also down from 16.07 rupees in the previous quarter. So a similar trend there as well.
Okay, and finally, how about their cash flow? That's always a key indicator, actually.
Well, their free cash flow, or FCF, stood at 245 crore rupees for the group, which is an increase of 39% quarter on quarter. That's a significant improvement. It means they are really generating more cash from their operations.
So while the profits are down a bit, their cash flow seems to be healthy. That's a good mix, right?
Exactly. It shows they're managing their resources well, which is a positive sign for the company's sustainability, especially when we consider their focus on acquisitions and expansions. So a bit of a mixed bag, but a net positive overall.
Okay, makes perfect sense. And as we move towards wrapping up, is there anything else that stands out?
Well, they did mention that they are looking into raising additional capital for their semiconductor subsidiary, indicating their commitment to drive growth in that sector. And that is a great indicator of the path ahead.
Okay, it seems like they're really pushing on the semiconductor front, like they are betting high on that sector.
Yes, it seems to be a strategic focus for them, a key growth area with high potential, kind of like planting a new tree in a fruitful garden, expecting a significant harvest soon.
Hmm. Interesting strategy, actually. So, any other interesting tidbits or announcements to be aware of before we wrap up this review?
Actually, yes, the company also granted 3,000 restricted stock units to an associate under their stock option plan, a way to motivate employees. It's like sharing a piece of the pie, so everyone works together for growth.
That's an interesting point, a motivational aspect that often goes unnoticed. And lastly, any final thoughts on Scientist's overall situation from an investor's perspective?
Well, based on this report, there are some mixed results, but they're making strategic moves for growth with expansions, acquisitions, and new product developments in key sectors. But remember, disclaimer, we advise investors to check with certified experts before taking any investment decisions.
Right, always important to be cautious and well informed. This has been a pretty thorough review. It's like putting together all the puzzle pieces.
Absolutely. And it's great to see a company making moves while also being mindful of financial health.
Yeah, and it's also good for our listeners to understand how all these pieces fit together so they can make informed decisions themselves. By the way, if you're enjoying this kind of breakdown and analysis, please like, share, and subscribe to our YouTube channel to see more.
Great point. And it's always insightful to dig deep into these kinds of reports. And I hope our listeners found it useful.
Yeah, it was great having this conversation with you. So I guess the big question now is, what will be the impact of all these changes and how will the semiconductor push evolve in the next few quarters?
That's a great question to ponder on. And it's what we'll be watching in their next report.